Morning, everybody. It's Monday, the 25th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour. I'm joined by Ian Common and Steve O'Hare. Good morning, guys.
Morning, all.
Good morning.
Everybody all right?
Yeah, all good.
Yeah, not too bad. Not too
A
bad.
bit cold, but did you guys get snow?
No snow.
No, we sent the snow up to you, eh?
No, we didn't get any. It was loads in
Oh,
London
yeah.
town, though, weren't there? Yeah, the London boroughs got hit quite
I was
badly.
watching it come over the map, and it was coming from the southwest. And as it was coming over, you could just see it just melted over London.
No, that must be the new strain of the variant.
All the the new variants, and just all the gases and emissions just melted all the snow. It all turned to rain as it come over Essex.
Marvellous.
It's cold though. It's a bit chilly.
Yeah,
definitely
freezing
cold
this morning.
Okay, so with regards to news, we woke up this morning with some headlines that the world economy is facing a tougher start to 2021 than expected after a massive surge in coronavirus infections, and also taking into account the rollout of the vaccinations and that they're taking time to take hold. Global growth is still on course to rebound quickly from the recession of the last year. But according to the World Bank, already this month, it's trimmed its prediction to 4% in 2021. And double-dip recessions are now expected in Japan, the Euro area and the UK as restrictions to curb the virus's spread are enforced. There was also record cases in the US, and that's dragging on retail spending and hiring, as you'd expect. And potential more restrictions in the UK in terms of people coming in. I think they're trying to tighten the borders to prevent new strains coming into the UK. So coronavirus still very much front and centre of everything going on at the moment. Still some optimism with regards to Joe Biden's proposed $1.9 trillion stimulus package. That's helping to lift sentiment, but more of the same by the looks of things. And if we look at the charts, it's very much the same sort of case there from what I can see. Should we have a look at some FX charts to start the day?
Yeah. We'll start off, as we always do, with the dollar index DXY. We sort of had a pretty boring day on Friday, sort of consolidated in the lower half of Thursday's range. And we can see that better on this chart here, which is the 4-hour chart. So just consolidating around this 50% pullback level. Like we said last week, or I have been saying last week, we still think this is a reverse head and shoulders pattern. So left shoulder, head, and then coming down to right shoulder. I don't think we're going to make it to 78.6% and this fib level, and that's only because when we look at the dollar majors, they look like they are only going to see mild dollar losses. I think 61.8% could be prime, or this previous swing low here, which is at 89.72. So if we go back onto, or reflect that back onto FX majors, I think this is pretty interesting. We've got completion of a 5-wave count to the upside. We've got I don't know, is that 5 waves down or 3 waves down? If it's 3 waves down, then it's corrective. Then 3 waves up would dictate that the next move lower should be the CD legs, AB, and then CD to the downside. If that plays out as head and shoulders, so that being the left shoulder, that being the right shoulder, then the measured move target is all the way down here at 78.6% at 117.59. We should note right now that Lagarde is speaking at 8:45 this morning, so she's live right now. If we go to this pattern, and this is an hourly chart, we've also got a Gartley formation which produced a bearish signal on Friday at 121.86, and that's still holding at the moment. Again, with the consolidation in the dollar index, and not really seeing an aggressive move to the downside, but a lot of the euro crosses, I believe, are more bearish than other single currencies. Cable, again, trying to sort of not pick a top in this, but trying to find a level of resistance, because it does keep on grinding higher. We have got this wedge formation. Today I've got some resistance here at 137.72, but it looks like we might be starting to make a move to the downside. Obviously we need a break of this trend line support, which is around about 136.13 for then an impulsive move to the start of the wedge, which is at 131.80. So both euro, dollar and cable holding or offering some bearish scenarios, but with potential to move to the upside. Dollar Swiss is a little bit different. Again, mirroring that dollar index, reverse head and shoulders, so left shoulder, head, and then trying to pick the right level for the right shoulder. This is prime. If I get this up here, 61.8% is at 88.21, and that is virtually bang on where this previous swing low was. So that's prime long entry as far as I'm concerned. But if we look at this sort of move to the downside, we can see a free wave pattern completed. So is 50% going to hold? Dollar yen struggling here, really. Got a resistance level. I'll just put an alarm on here, 104.05, which is close to sort of previous swing highs. Obviously, if stocks start to move to the downside, then yen will be a beneficiary. Dollar yen, I don't believe, is one of the best currencies to play. Aussie yen probably best for a bearish scenario. Dollar CAD, and I like this from last week. We talked about this. We talked about the fact that on the daily chart we've got an morning doji star formation, quite a decent one as well. We had a small gap open which got closed, and then we moved to the downside. These alarm areas are support levels, so 126.58, 126.93, and if we go to this time frame, which is the hourly time frame, so made quite a decent 261.8% fib. So Elliott wave enthusiasts will see that as 1, 2, 3, 4, and up in 5, and then choppy correction lower. Prime long entry is here. As I said, they've got 126.93 and 126. It's not 126.93. 126. Yeah, sorry, 126.93. And this. Why is that saying that? It's nowhere near 126.93. It's saying dollar. Anyway, 126.41 that is, and 126.47. Now the alarm says, if you look, I'll point at it because I can't point at it with my mouth. So it actually says dollar CAD crossing 126.93, but it's actually at 126.41. So it's a glitch on Trading View there. Aussie dollar. This is prime short entry. If we make it 77.65, it's a trend of lower highs, and it's also a 78.6% pullback level. The big picture, I think, still looks like a bearish triangle formation, so support around here and then making these lower highs. If we get a break to the downside, the measured move target is down here around about 75.50. Euro sterling, I think we're going to make a little reverse head and shoulders pattern, so neckline being around about 89.20. Got a previous swing low here at 88.65, and we've got some support here at 88.60. So I'd look at that for a potential long entry, but I think the big picture, long-term picture for euro sterling is definitely bearish. And if you look at this time frame, which I can't actually believe that it would ever play out, but the fact it hit this 88.6% level, this is a monthly chart, and it hit it virtually pit perfect. So it's made the XA and the AB pretty perfect, and then it's made this BC literally to the pip. It would say that the long-term picture is all the way down here at 35. So we could all be buying places in Spain at that point if we're allowed in. Because we're not allowed in until at least September this year, supposedly. Reading a report.
Is that right?
August and September, they're saying that they're not going to open the borders up to the UK.
More staycations this year then.
Staycations. I was sort of saying to Tracy, best try and book something up soon, because I don't know how long this will. You don't know how long this is going to last for. I don't think anyone's going to be going abroad, to be honest. And Euro Yen, just coming into the last one there, we've got a resistance level at 126.49, and that's virtually pit perfect for this channel top. And if we look to big picture, that would look like a big flag formation. So if we move that across there, so that would basically mean the bias to break to the downside, and then a decent measured move lower, which sort of lines up with a bearish euro scenario, I believe. So yeah, I think sort of stocks, looking at risk currencies look like they want to move higher. I think they might need a little bit more of a catalyst, and euro looks like it wants to move lower.
Cool, thank you, Ian. Steve's having a few tech issues. He's back up now. I don't know if he wants to run through some charts or not. I'd say not, given that he looks.
I've got a few levels on some of the indices. If you want me to have a.
Yeah, well, I was looking at that exact chart you got up there, actually, thinking that there might be potentially a bit of a turnaround there.
Yeah, US 30s, the Dow got a previous swing high up here, and then we've got a resistance level here at 31200, which is virtually at the 78.6% pullback level, which is at 31204. We're getting a reaction off the 50% fib this morning, so I don't know whether or not we're going to hold this low and then move up to this sort of level, but this is the prime short entry as far as I can see. This is still making new highs, isn't it, overnight? Nasdaq, I suppose you could stick a fib on here, but it's going to extend to 423.6% probably. I can't see any. Well, it's 361.8% fib up here at 135.47, but apart from that, I couldn't see any reason to stop this bull run. I mean, obviously, if you get a move down towards these sort of levels, I think decent support keeps on being bought into. I don't think I've got anything on the DAX. I've got a resistance level here on 40.75. So again, they are decent fibs. It's an 88.6% fib, but with these aggressive moves this morning that we're seeing on these hourly charts, is it hourly charts?
Yeah,
hourly charts. I'm not sure whether or not we're going to get another move to the upside, to be honest.
Yeah, it's an odd one this morning. I mean, just quickly going over some of the Steve, I'm just going to take over for you here, just in case you've got any issues. Daily chart on oil, just take a quick look at some of the commodities. Obviously, still very much in a strong bullish move higher. A little bit of consolidation going on at the moment. Some fairly bearish candles that have posted on the daily charts there. We've got that big outside candle there, another engulfing posted on Friday. But while in this sort of bit of consolidation, there is still potential for that to break up and continue higher. In terms of gold, in the daily charts, I've just still got it in sort of corrective mode, really. Overall bullish, but while trading in this sort of downtrend channel, you could argue that it's continuing to correct, and therefore you're going to continue to see choppy price action in fairly short term. So I don't think there's many opportunities really on gold at the moment, as far as I can see. On that daily candle there from the 18th, we did post a bit of a hammer candle, so potentially hammering out a bit of a bottom in the short term. But again, while within this range, I think we're going to continue to see choppy and sideways price action. As Ian mentioned, with regards to the equity indices, FTSE 100 first up, saw this break above 65.76, and since then we pushed up towards resistance levels just below 7,000. Again in corrective mode, as we can see this retreat from those highs there, pulling back potentially for a retest of this support around about 65.75, 66.00. So we'll have to wait and see, but I still think potential for a bit of downward pressure on the FTSE down towards those levels in the short term. In regards to the CAC, potentially some sort of rounding formation going on here. we're sort of around this 78.6% on the daily chart, and we're not really extending either way. The candles are narrowing up, and in the last few days or so, there's been a fair amount of red candles on that chart. And finally, on the DAX, we are up at these highs, above the pandemic highs that we saw back in February. But again, price action is flattening off, and we're getting some indecision on those daily candles. If we take a look at it from an intraday perspective, I've got a bit of a messy chart here, potentially a couple of head and shoulders top patterns. So a larger one going on here, and then a smaller one here, potentially just forming that right shoulder just in there for a move lower, which looks like it could be underway now. This is the key level that I'll be interested in, 13,671. If we break that, then I think that we could head down to this measured move target, which is 13,200. So I think the better risk reward is on the downside, and that's where the value is on the DAX for me at the moment. FTSE, not so sure. As I mentioned, I've got this support down here at 6,600, which may cap the downside. So a bit of a mixed bag, really. And obviously, Ian, you touched upon the US indices. We've got Nasdaq making all-time highs and Dow looking a little bit choppy. I've got a bit of a range here on the intraday charts. Bit of a break of a short-term uptrend, potential for a move down towards support there at 30,745. Okay, so we can move on now to the gun to the head stuff from Friday. It's a shame Steve's not here to revel in his glory, because he had a monstrous win on the DAX on Friday. He made 5.4R on his DAX trade, which is the biggest win we've had in some time. Ian, you had a 0.43R loss at 9 o'clock on Aussie yen, and I was stopped out on Euro yen. But
do you mean
Steve
Bitcoin? It was Bitcoin.
What was I saying?
DAX.
No, I didn't mean DAX. I meant Bitcoin. Sorry about that. Yeah, 2,165 ticks for Steve.
Wasn't offside, surely.
4R. Yeah.
The stewards there.
Check it.
I'm checking it.
Yeah, that helped. So that's put a nice big uptick on the P&L. Hopefully, we can continue from that. You're not liking what I've seen?
No, just flick it over. There was my entry, 80.17.
Euro. Sorry.
Oh no, fuck! You are right. 9 o'clock open. Oh no, hold on. 1 hour chart.
Got to close there at 80.10.
Open.
I've got you in at 80.35. 80.10. Sorry. There you go. You made a small win.
80.06.
80.06. Quarter of an hour. Sorry about that.
It's all right.
That helps. Puts a little bit more.
You got to keep me on my toes, haven't you? Jesus Christ.
Sorry about that.
I thought we were on the same team.
Yeah, I do apologise.
So no wonder your eye looks so good.
I was watching the cricket while I was doing it this morning.
Outrageous.
Yeah. Okay. So who's got? Have you? Well, who? You. Steve,
Euro dollar, but it's starting to go. But anyway, it's got a long way to go, I believe. So, like I said before, risk off should mean buying of the dollars. I like this head and shoulders. I like it even more now, and I'm in this one myself. So I will. And then the Gartley pattern. So Anne Lagarde speaking, and we've just had IFO out of Germany, I believe, which is shocking. So it's all starting to move to the downside. So I'm going to get a short euro dollar. I'm going to have to put my stop there now.
Steve's watching. Hi, Steve. Well done on your Bitcoin trade.
121.62, 121.86, 120.54, giving me 4.48R for a short in euro dollar.
Lovely. That'll do. I'm going to take a look at the Dow and a flick through that chart a moment ago, but this is the hourly chart. We've got a range that's formed here on the hourly, and I fancy it to head a bit lower. So I'm going to sell it now at 31,033 targeting a move down to the support level over here at 30,745. Stop loss above these highs that we've posted over the last few hours at 31,120. So looking for just over 3R on that trade today. So we'll see. So no Steve unless
unless he pokes one in.
Glory. No. It'll just be the two trade ideas today. As Ian said, Christine Lagarde is speaking right now. We've had the German IFO business climate figure out, which was worse than expected. So we was expecting a fall to 90.7.
89.2 we got.
89.2. So
business climate was expecting 92, got 90.1. Current assessment 90.7, got 89.2. And then expectations 93.2, got 91.1. Lagarde speaking, then ECB's Lane this afternoon as well. Australia Day. And then Lagarde's having another go. Didn't know she was
busy girl today.
Yeah, gonna say. Topping and tailing us. So she's on again at 4:15 UK.
Okay.
And then BOJ monetary policy meeting minutes overnight. Say that when you're pissed. Around about midnight for any lunatics that love to get up and watch that crap. And then tomorrow morning, before we're on air, you've got UK unemployment.
Okay, plenty to keep us on our toes to begin the week then.
Yes, indeed.
Okay, great. Well, let's wrap it up there. We'll all be back tomorrow, hopefully. Steve sorted his tech issues. Until then, have a good day, everybody, and see you tomorrow.
Yeah, enjoy. Cheers, Joe.
Cheers, then. Bye.
Bye, mate.